The China and Africa podcast is brought to you in partnership with the Africa-China Reporting Project at Wits University in Johannesburg. The ACRP promotes balanced, considered reporting on Africa-China relations through innovative training programs held throughout the year. More information at africachinareporting.co.za.
Welcome to another edition of the China in Africa podcast. I'm Eric Olander. Unfortunately, Cobus is unable to join us today because he has a series of very important meetings that he had to attend and couldn't get out of. I tried to pull him out, but we couldn't get him out of it. But through the magic of technology, he will be joining us later in the show with some pre-recorded questions for our guest today. Hey, one very quick note before we get started. This is our first show as part of the SupChina Network. For those of you who are not familiar with SupChina, it's really one of the best sources that covers China and all things China. It's fantastic. We're just so proud that this podcast is now a part of that network. And we're working with Kaiser Guo and Jeremy Goldkorn from the Sinica podcast. Really, if you're not listening to Sinica and you are missing out something important, which is the definitive go-to podcast for China. So we're just thrilled to be a part of that. We'll have more about what's going on with SupChina later in a few weeks. But for today, we're going to talk tech. Now, tech was one of the big stories of 2019 and will definitely be a defining issue this year as well. And so let's just start with the numbers, because in so many ways, the numbers tell the story of China's dominance in the African tech sector. In phones, there's some Q3 numbers from 2019 that came from IDG. Transsion's brands. Now, Transsion, for those of you not familiar, is the Shenzhen-based mobile phone company that is really a phenomenon. It went public on a Shanghai stock exchange. The Star Market last year got a valuation of $7 billion on its IPO. Transsion's brands, which include Tecno, Infinix, and itel, many brands that people in China, certainly in the US, have no idea who they are, but they dominate in Africa. Listen to this. In the feature phone market, they have a combined unit share of 64%. Nokia was second in line with just 10%. Now, that's in feature phones. In smartphones, Transsion is number one as well with 36%. Samsung is 23%, and Huawei comes in third at 11%. So double-digit lead over Samsung. You don't see that in too many other parts of the world where Apple and Samsung are obviously so dominant. Now, it's not just in hardware. It's now going into the app space and the services space. So let's take a look at a service called Boomplay. Many people outside of Africa also are unfamiliar with Boomplay, but if you have a phone in Africa, and you are probably one of 62 million customers across the continent who are subscribers to Boomplay, phenomenal. Now Boomplay is actually expanding beyond Africa into Europe and into North America to target Francophone speakers there, the diaspora African population. So it is going global. This is one of the only markets in the world where Spotify is getting trounced. Spotify is only available in 5 African markets. And Boomplay, which is Transsion and NetEase, 2 Chinese companies, Transsion, of course, that phone company, they are behind that. Now, venture capital. Last year was an incredible venture capital story. Let's see, we're talking about $240 million of VC funding came from 15 different Chinese investors, putting money for the first time we're seeing now into non-Chinese companies. Now, in the past, when Chinese investors went abroad, they would put money into other Chinese companies or people that they knew in their network. Now we saw in Lorry Systems in Kenya, which was a transportation play, they got a Series A round. Some of the estimates were between $15 and $30 million for that, Chinese investors in that. OPay in Nigeria, Palmpay. These are fintechs out of Nigeria. We're going to talk more about fintech today as well. All getting very, very big seeds from Chinese investors. Opera, the mobile phone company, speaking of OPay, which is the Opera Pay, second most popular browser on the mobile platforms in Africa. So again, dominance. Finally, let's go. And I can keep going for statistics now on what's going on here for the next 35 minutes. I won't do it. Last one, I want to talk about start times. Now, we don't think of that in the context of a traditional tech play, but this is a company that has 30 million users in 37 different African countries. They're doing both DTV and OTT, so direct TV and over the top being, of course, internet delivery or mobile phone delivery of TV services. 30 million subscribers. Really, it's incredible. The big one out there that we haven't talked about, of course, is Huawei. Huawei, of course, built about 70% of Africa's 4G network. They're now also doing 5G installations across the continent in some of the more advanced markets. But I think you get the point here that the Chinese are now the dominant tech player in key parts of Africa's digital ecosystem, and increasingly now in the finance part of it as well. And that's what we're going to talk about today. It's hard to find people who know both the African landscape in the digital and tech market and the Chinese space. That is actually a nexus that we don't find too many people. One person is Stephany Zoo, who is the founder of the China-Africa Tech Initiative. She's been involved in tech in both China and now in Africa for so many years, in fintech, in cryptocurrency, in digital marketing. And this is the first time. We go back quite a ways, and I assumed that she had been on the show many times, and in fact, she hasn't. So, Stephany, welcome to the China and Africa podcast for the first time. We're so glad to have you join us from London.
Thank you so much, Eric. It's a pleasure to finally be on. Eric has been trying to get me on the show for so long.
It took a long time, but I think the timing is great to start off 2020 with you on to help us kind of set the stage for what we're looking at now in the tech space in Africa. It really feels like in the second half of 2019, something changed, like a critical mass and momentum started to build up, not just for what the Chinese are doing in Africa, but for the African tech space as a whole. So you work mostly out of Nairobi, but you travel all over the continent. You are in the fintech space. You do a lot of cryptocurrency. You get to interact with a lot of people. Let's start our conversation at the 10,000 meter, 30,000 foot level. Where are we right now? What's going on? What triggered all of this excitement in the African tech space that will then lead into what the Chinese are doing?
2019 was a huge year because I think a lot of things crystallized all at once, not just within Africa, but also within China. So the Chinese VC market crashing obviously made a really big difference when it came to potential companies that these VCs that still had money could actually go and invest in. I think that, for the past, five-ish years in East Africa, even in West Africa, there's this huge growth of these startups that a lot of Western VCs have been starting to invest in. First it was a stage of kind of grants and NGOs and those kinds of social impact or more development fund organizations that were funding these kinds of companies. Then we moved more into like pure VC coming from the West. And now finally we have more of the VCs coming from the East, but it's been this, gradual growth of the startup and the tech scene in East Africa and Nigeria. Predominantly Nigeria so far, but then you see it growing in all of the other regions as well. And so I think those things coming together, the crash of the VC market in China, as well as this explosion of hitting a critical mass point in startups in Africa really came together to make a perfect mix for these Chinese VCs to be ready to actually invest.
One of the theories that's circulating out there about the Chinese interest in African tech plays, particularly from the VCs, is that the U.S. and Europe now are becoming increasingly closed to Chinese investors in the tech space. So Chinese money now has to go somewhere. The Chinese market itself is saturated. It's slowing down. So looking for new areas of growth, Chinese VCs are now exploring things that they never would have considered 5 years ago. And that kind of was so I think about the Lori Systems investment by Crystal Stream, I think it was. And again, these guys don't have any connection to it like they would have, say, 5 years ago. Again, my friend works there, so I'll invest. Sure, fine. But that wasn't the case in Lori Streams. They invested in Lori Systems because it was a good investment in their view. Is that because of the U.S.-China trade war and what's going on with the U.S. that the investors now from China are looking to Africa because of necessity?
I think this trend started maybe 2 or 3 years ago even, just the beginning kernels of it, you start seeing large Chinese funds going into Southeast Asia. And I think from Southeast Asia, which had a very similar demographic as China does, very similar kinds of mobile penetration, and in certain ways it's close to home, right? So that was comfortable for them to leave China to start investing in a lot of the more or less satellite countries around that area. Then they started actually, I would say last year, looking a lot into the Middle East. So another big investment was into Swivel this year. And that was MSA Capital, which is, traditionally quite a big, billion-dollar fund in Beijing. And they participated in Swivel, which is a Egyptian transport startup. They didn't disclose how much in the Series B, but it was a total series of $42 million, so quite a big investment. And you can see that there's a couple of other Chinese investors have taken stakes in other Middle Eastern e-commerce sites. So e-commerce, once again, something that they're very comfortable in. So we're still seeing that these Chinese investors are investing, maybe not in people they know, but still in industries they know. So I would say this is maybe accelerated by the U.S.-China trade war, by kind of these geopolitical movements. But this is a trend that has already been starting. Chinese investors have been looking outside of China for quite a while in the last 2-3 years. And then, it seems like organic growth from Southeast Asia into the Middle East and then finally moving down into Africa. They're kind of slowly moving further away both geographically and culturally. And I think as they have successes in each one of the previous regions, they feel a little bit more confident that they'll be successful in the next region. And that's kind of what's prompting them to go on.
It's interesting that you say that they're investing in things that they know. And when we look back at the Chinese development history, one of the areas is infrastructure, obviously. That's something over the past 30, 40 years that the Chinese have done exceptionally well. And they're bringing that expertise to Africa to build roads, ports, bridges, you name it, but also now in the digital infrastructure space. Bandwidth, that's what Huawei, ZTE, some of these companies are doing. But more recently in China, it's been all about mobile money, fintech, e-commerce, moving people, money, ideas, and data around are things that people know. So as I said at the top of the show, unfortunately, Cobus wasn't able to join us today, but he is here in spirit, and we asked him to record a couple questions in advance. And, Stephany, his first question is about fintech, which is right up your alley. So let's hear what Cobus has to say.
Some of the recent Chinese venture capital investments have focused on African financial technology startups. Why do you think African fintech is interesting to Chinese investors now?
So it's interesting because I work in a very specific fintech space. I work in the B2B fintech space. The company I work for, Aza, does cross-border payments in, out, and around Africa, and one of our big markets one of our big corridors is the China-Africa corridor. But if you look at the kinds of companies that Chinese investors have invested in within fintech in Africa, the two big ones are OPay, right, and Boomplay. So OPay, I would still consider these are not within the same league that Lorry Systems is in, because Opera, despite having Western roots, is actually now owned by Huawei, who is a very large Chinese kind of star of the Chinese tech world, and it has been no small feat in his fundraising. OPay raised 120. OPay raised $50 million in their Series A, which was in July, and they raised another $120 million in their Series B, which was in November. Right? And it is unheard of that you raise a Series A and a Series B so closely together, for a total of $170 million in Africa. That's just unheard of. And that's, really only possible because Zhou Yaohui is such a rock star in the Chinese tech world, and all of these big IDG, Sequoia, everybody's willing to come on because they trust him and they trust his bets. And so this is, I think, a classic example of Chinese investors investing in somebody they know, as well as a business model that they know, right? And OPay, OPay, as well as their kind of sister apps, O-Ride, all of these, Opera, their entire ecosystem right now is just trying to blanket the market in Nigeria, in a number of other countries that they're going into because they have all this investment. And that's making other players who are existing in the market. So, for example, Paga has been in the market for quite a while, and they have about 10 million users, but they raised their own round, but nobody can compete with $170 million, right? And Boomplay is within the same ecosystem as you mentioned earlier, Boomplay, and the Transsion NetEase kind of companies that came out, their portfolio companies, and which raised another $40 million. So you're looking at really big numbers that these companies are playing with because of the Chinese funding, and only through kind of this kind of funding, they've kind of edged everybody else out of the market. So now it's, unfortunately, I think, a war of attrition. But this is what previous Chinese investors have known, right? So many, if you look at, Mobike and that entire case study within China, it was, spray and pray. Let's see how many subsidies we can give our users, how many people we can get on, and look what happened then. And that's definitely not what we want to happen in currently the battleground is Nigeria within fintech. But I think it's something that the Chinese investors are used to, so they're not uncomfortable with it.
Yeah, I mean, that's very much the Chinese model where Meituan, for example, which is the e-commerce delivery company, burns an enormous amount of money every month. And a lot of Chinese companies are accustomed to burning that money up front in order to kind of gain market share later on, which is reach before revenue, right? That's the old classic Silicon Valley kind of idea. But we've seen that fail repeatedly, not just in China, but in Silicon Valley and elsewhere as well. And so it makes you wonder if African startups can process all this cash coming in, because it's not always easy. Everybody says they want a lot of money, but getting a lot of money always comes with a lot of expectations as well. And so being able to kind of go too quickly on that. I guess one thing I want to, as you were talking about all the money coming in, I was curious, how does the Chinese investment, which sounds big, how does it compare to, say, what others are doing as well, either from other African countries, also from the United States? I know Visa's done some very big deals in Nigeria. So how do the Chinese compare, in your view, to what's coming out of Europe, the US, and Japan?
I think if you looked at around mid last year, there was a report that came out about $450 million have been invested into Africa by that time when the report came out. But about a quarter of that came from Chinese investors. And I think kind of later in the year, especially with OPay's major raise of $120 million, then the Chinese investors basically took about more than half of total investment within the tech startup world in 2019. And so I think considering, that it was a blip in the radar, Chinese investors were a blip in the radar in 2018, that they came in and took over half in 2019 is a huge deal. They came in guns blazing, which I think in many cases the Chinese do. And that also scares away a lot of other investors, right? In the rounds of fundraising that we've participated in, we definitely have to think about the dynamics of who's on our cap table already and how we mediate and the considerations they might be having with the types of investors that we're raising with in the future. Those are kind of and then how they're going to interact in the boardroom. So, talking to my friends at Lori, they're really excited about having Chinese investors on their cap table because they do bring a different perspective. But then, how does that different perspective play out when you're talking about voting, and shareholder power within your boardroom, right? Those are all things that you definitely have to consider. And I think when a Western investor is coming in and looking at that and they're putting in a smaller amount than a Chinese investor is, they're also making those considerations. And so, that might be something that is making them a little bit more wary as they're making more investments in the space.
Well, let's talk about that culture piece, because I think it's very interesting and very important as well. And this was one of the problems that Silicon Valley startups had when they took Chinese money, because the Chinese management style and even the investment style is very different, as you pointed out, not just in the boardroom, but just how CEOs and founders run their companies. And when you take a lot of Chinese money and you've got somebody who's invested a lot of money in your company, they get a vote in how you run the company.
Exactly.
How is it that these new Chinese investors who are coming in, how are they acclimating to the African startup culture and the African management method?
So if we back up a little bit, as I'm having conversations with these VC guys, one of the things that I keep trying to encourage them to do is to spend more time actually in Africa, right? It doesn't matter if it's in Nairobi or Lagos or Johannesburg. They're really just coming in. They're doing, an investor learning journey. They're meeting, a handful of startups. They're zooming in and out, right? And it is so difficult to actually get a gauge of the types of companies you're working with and even the ecosystem that the company is operating in if you don't spend a significant amount of time in Africa, right? So I think this is something that they definitely need to consider more of, as they're investing, and then so that when after they invest and they start trying to give advice or trying to take advantage of those votes that they, because of their investment, they're not caught off guard. So I think it's still a bit early to tell how exactly these investors will interact with, or collide or collaborate, either one, with existing investors and the actual entrepreneurs. But I think a lot of the entrepreneurs who've chosen to take Chinese investment have done so strategically, right? They know that there's a reason, there's some kind of business model or partnership or technology that they're seeking through this Chinese investor. And the Chinese investor hopefully has very clear goals in mind as well. And if that's the case, then they can, if they can actively communicate, I don't think it'll be a problem. But at this point, I think it's still too soon to tell how much of a problem or an advantage this will be.
Support for this podcast comes from the Africa-China Reporting Project at Wits University School of Journalism in Johannesburg. The ACRP provides reporting grants, workshops, and other professional development opportunities for both African and Chinese journalists. Follow the ACRP on Twitter at Wits China Africa or visit africachinareporting.co.za for information about grants and upcoming seminars.
Over the last year, we've seen some expansion of e-commerce links between China and Africa. Particularly, Rwandan farmers have started selling coffee quite successfully to Chinese consumers via Chinese e-commerce platforms. How do you see the e-commerce relationship developing between China and Africa in the future?
In terms of e-commerce, I think this is a hot topic. Everybody wants to talk about it. I still see, so like I mentioned earlier, my company does cross-border trade or cross-border payments in between Africa and China commonly. And a lot of our customers, we help do the FX for e-commerce companies or for traders, exporters, importers, etc. There is still a lot of issues within the infrastructure side of things. So in Rwanda, Alibaba signed a partnership with the Rwandan government to do EWTP, which is basically to help facilitate customs and clearance. I think that is still a really, really big issue within the e-commerce trade unless you are able to open, have all of the logistical infrastructure set up correctly, you're still going to have a lot of trouble scaling your e-commerce, right? If you look at Jumia and what's happened after they IPO'd, and the fact that they've now taken back, they've laid off, they've closed different markets, I think that is a perfect case study as to what not to do because they didn't consider the difficulties around infrastructure, and I think this is something that Chinese companies will often underestimate because infrastructure, roads, Kuwaiti, all of that is so common and so easy in China. You can plug in, or like Jingdong, you can make your own infrastructure versus there are huge blockers around regulatory and customs and clearance and all of those issues within different African countries. And at the end of the day, Rwanda is obviously very innovative when compared to a lot of other African countries when it comes to, technology and new platforms, but they are also a tiny, tiny market. So saying that Rwandan coffee farmers are doing well selling coffee to China is not very representative to me, right? I think you still need to look at bigger markets, South Africa, Nigeria, Kenya, or different economic blocks and see, if they can come together and think about more macroeconomic exporting and that kind of trade, cross-border trade, and then seeing whether or not e-commerce is the right channel to do that versus just trying to sell just thinking about e-commerce as a solution and trying to scale up, that you'll run into a lot of problems with the government there.
What I don't understand, though, is that China and Chinese companies have the experience in that last mile in very much developing markets. So Alibaba bought Lazada here in Southeast Asia. Mm-hmm. Xiaomi is working and been very successful in India. These are markets at comparable development levels of many African countries. And they've come full on into Asia and Southeast Asia and South Asia, but have somehow hesitated when going into Africa. So why haven't the big Chinese, the bats, if you will, let's see, that's Baidu, Alibaba, Tencent, and what's the S? There's one more I'm missing. How come they haven't come in force and brought that expertise, that same type of kind of gusto that they've brought here in Southeast Asia into Africa?
I also wonder that constantly, actually. One of the things, you would think that Alibaba would be a lot more aggressive. Alibaba has some great programs in Africa. They have an e-founders program where they, bring African entrepreneurs into China and they train them and show them kind of, behind the scenes how Alibaba runs everything. And, the e-founders come back to Africa and they're so excited and so inspired by Alibaba's story. And I think that kind of fully immersive training is so great. And now they have their Netpreneurs prize, which is $100,000 every year over the next, $1 million every year over the next 10 years. They're doing a lot of things to encourage innovation, but they don't seem to be doing a lot themselves here, right? I think they're maybe being a little bit more cautious because they're aware of how enormous and how fragmented I think the African market is, right? Just because you can do something in South Africa doesn't mean that you have Zimbabwe, Botswana, Namibia, everything around it, and you might want those countries as well, right? I think when Tencent tried to come in with WeChat, and they really, really struggled despite the fact that Naspers, which is one of the largest African media companies, owns a huge stake in Tencent, is because they weren't willing to adapt the product enough. And so because WeChat couldn't really take hold, I think Tencent was kind of scared away by that as well. I'm also surprised that they haven't, at least tried again. But I think maybe they have their hands full, in Southeast Asia, that kind of arc of travel, from Southeast Asia into the Middle East, then finally into Africa. I'm wondering if the BATs will take the same route, and I'm wondering if it's just that they haven't gotten to Africa yet.
It's interesting to talk about Southeast Asia because in many ways it's a parallel to Africa. There is no ASEAN strategy. You can't have, and there's
Right.
600 million people in this market. You can't have a pan-ASEAN strategy. You need a Cambodian strategy, a Thai strategy, a Filipino strategy. Each market is different and distinct. And yet, they're here in a very big way, the Chinese. So it shows that there's a willingness, but maybe as you pointed out, they are willing to do it. Just a little bit of context to your comment about how Tencent didn't want to adapt its WeChat app to the African market. WeChat is a huge app. I think it takes up a lot of space on your phone, and it's also very bandwidth hungry. It's constantly pinging the network, checking for things. And in Africa, where you're paying for your bandwidth by the minute oftentimes, it just drains out A, your battery, and B, your time on your card, on your SIM card. So they weren't willing to do what Facebook did and make a light edition, which was less bandwidth hungry in that sense. And so, as you pointed out, they backed up. I'd like to talk about the elephant in the room. So I sit in front of Google all day and Chinese sources and just putting together the daily newsletter and all the content that we do on the China Africa Project. And there is a massive divide in how China tech is covered by U.S. publications and by African publications. Mm-hmm. So in the U.S. publications, it's all about Chinese tech is taking over the world. Chinese tech is going to suck data up and send it back to Beijing. They're spying on you.
Right.
Anything to do with Huawei is bad. And yet, when we look at the African tech coverage, whether it's in Kenyan newspapers, Nigerian newspapers, it's a lot like what you have been talking to us about. It's on the merits of the business. It's exciting. It's growing. It's on the deals. It's all of that. The security part of all this is not there. When you have your conversations in your day-to-day world, going back and forth between the Chinese, Nigerian, Chinese, Kenyan, Chinese, African world, how much do the issues of security, cyber spying, surveillance, all the things that are common in the U.S. press come into the conversation, or is that really something that's not part of the discussion in Africa?
So I'm really excited that you talked about the press angle. I think even when I first moved to Nairobi 2 years ago, I was writing a column for a business daily that was basically myth busting about Chinese people, because there was still so much negative press. It was like negative press about the SGR. It was negative press about Chinese people kicking Kenyans out of their restaurants. It was still very negative. And in the past maybe 6 months, maybe a year, right, you're seeing all of this more positive. People are talking about Boomplay and Pompey, and they're so excited about their Transsion phones. They love techno, and we've really come 180 when it comes to the press coverage. I think when we're talking about security and data privacy, it is often in contrast with what is happening in the U.S. or in the European world. So when GDPR came out last year or 2 years ago, a lot of African companies really had to comply to GDPR simply because they either had European parent companies, European investors, European partners. They had so many connections to Europe to begin with that they had to put in all of these requirements by GDPR. And GDPR is not, an easy list of things to comply with. And it was really costly and really difficult, I would say, for a lot of the African companies. And in many ways, I would say kind of needless, right? I think the threshold for what a European wants out of data privacy is probably different from what an African wants, which is different from what a Chinese person wants, right? And one of the things that I actually encourage more is to think about, the data privacy within a Chinese regime versus a Western regime, and even thinking about how to customize and do something in the middle, right? The problem is when GDPR came out, there were a number of legal regulations that came out in Nigeria and Kenya, and I believe a couple of other countries as well. They were basically copies of GDPR. They weren't actually focused on anything that was African specific or country specific. They were just kind of adopting what was already existing within the European regulations, and I didn't feel that was fair to the African consumer or to the African company. I think that the conversation about security is present, but not prevalent. It's interesting. There's a new building right next to my house called One Africa Place. And when you enter the turnstiles, it is all facial recognition, and it is all run, the hardware and the software is done by Hikvision, right, which is a very large Chinese securities company that basically is mostly owned by the PLA. And when I tell people this, they're completely oblivious to it. So they just think it's this really cool technology, that it's facial recognition when they walk into the turnstiles. They're not aware of basically who has created that technology and perhaps who owns that information. I think in general, the African consumer is a bit less sophisticated when it comes to issues around data privacy. And so maybe that's one of the reasons it is not as top of mind as other kinds, Western, maybe in the media, in the West, in the U.S. But overall, I think they're aware of it, but maybe they're just not at the point where they care that much. They're just excited about the technology, and maybe the data privacy and the security part of it will come afterwards.
Well, that's the way we were about Facebook 10 years ago, too.
Right.
And we've learned since then that we live in a surveillance economy where Google, Facebook, Twitter, all of them make their money on using our data clouds.
Exactly.
And our data streams about us. And we've learned that there are some very, very serious negative consequences to that. So I'm just wondering, is China taking advantage of the fact that there's weak governance in the digital space in Africa for things like privacy, for data hosting, and all of the different issues that we are now starting to get on? But by the way, in the US, we can't sit on a pedestal either. We're not very good at it because Google sucks up everything that we do. Now, the state doesn't do it. And I think what people's concern are in places like Washington is that the Chinese state is going to have access to this data. Again, we don't know. I don't know. But it is a concern. From the point of view of investors, do they have any concerns about this? Obviously, the guy on the street, he or she is more or less oblivious to it. But when you deal with investors, is the security question something that comes up, or are people just looking at the market opportunity?
So just to go back to what you said earlier, are Chinese companies, taking advantage of this? I would say it's not just Chinese companies, it's also African companies. So recently there were some issues around Safaricom, which is Kenya's largest telco, and some of their data privacy and the kind of information they can collect. And not only are they the biggest telco with basically 99% market share, they also own M-Pesa. And so they have all of this data on everybody's spending habits, right? And they actually recently had to do a campaign that was like, Safaricom is transparent and simple and it's made for you, because there was so much retaliation against this, against these issues. So, Chinese companies are maybe not the only ones who are taking advantage of the weak digital laws. I think I deal predominantly with Chinese investors, and from their standpoint, and oftentimes a lot in the B2B space, and so regulation and data privacy around that is a little bit looser. I haven't heard any immediate concerns, I would say, but perhaps for them it is to the net positive. I think at least the entrepreneurs I know have quite have a lot of integrity, and if at any point they felt like the data that they were collecting from the consumers was being used unfairly, it would be definitely flagged. But then again, you have to think about, okay, there's all the techno has such massive market share, so probably all the data that needs to be collected is already being collected. does the Chinese government need to collect more data through, let's say, SafeBoda or some other app that has been invested into by Chinese investors? I would say the answer is no, right? That seems like a really roundabout way to do something sinister versus they could just, tap into techno, which, I'm sure they already have, deep connections with. I think I kind of believe, the simplest answer is usually the correct one. And, these kinds of concerns are there, but they're not going to – I don't think it's really an issue that's make or breaking any investments currently.
In the past, I got the impression that China was a bit hesitant about cryptocurrencies. Now they're launching their own, seen as a direct competitor to Facebook's Libra cryptocurrency. Why do you think they made this move now? And do you think Africa is a likely target market for this new cryptocurrency?
So this cryptocurrency, it's interesting because I worked in cryptocurrency for one of the largest exchanges back in 2014, up until 2017 when China was really cracking down. And I remember all the back channeling and trying to understand what the motivations of the Chinese government were. And then finally, when they cracked down, it killed the crypto markets. It fell from 7,000 to 3,000 basically overnight. It was a huge deal. And then them coming back and making their own cryptocurrency, to be honest, was not that surprising, I think, to a lot of people who knew China well, right? This is China. The Chinese government doesn't like things they can't control, like distributed ledger technology. They are okay with technologies that they have studied and understood and now have a handle on it, right? So that's exactly what their PBOC coin is, basically. It's not necessarily distributed ledger technology in the pure sense of the word because it is completely controlled by them. And I think that's the reason why they came back. They would have done this sooner or later. They need to have kind of their hands in all the pots when it comes to emerging technologies, and blockchain certainly is one of them. From what I've read and heard, it definitely sounds like Africa and other emerging markets, frontier markets, whether it's all of the other BRI countries definitely seem like a target. Even Libra, right? Libra talks about using Libra to bank the unbanked. And there's a lot of market penetration to still be done in Africa, and they're trying to do, and I don't see why, the Chinese government, which already have a lot of reach in Africa, would not start to try to scale the use of this extensively. I think it's really tough when it comes to trying to get African consumers to adopt such new technologies, but because the Chinese government has so many different arms and mechanisms, whether it's companies or think tanks or funds or whatever, to actually implement the use of this, it will be significantly easier for them.
So imagine how this cryptocurrency in Africa might work, because I've long said that there was no way on God's green earth that companies like Transsion were going to put Libra into their ecosystem. To me, that was never going to be a thing, because even though Transsion is nominally a private company, it still has a very close and probably a very good relationship with the Chinese government. Having people use money anonymously is not something, as you pointed out, that the Chinese like. So, and tell me if I'm way off base here. The average African consumer may never know that they're using a Chinese cryptocurrency. What will happen is that inside the walled garden of all the different services now that Transsion's bringing out, from fintech services to music to movies to all the different things that they're going to do, the payment mechanism on the back end will be a Chinese cryptocurrency. For all intents and purposes, the front end, who knows how it works? Is that an opportunity for Chinese companies and the Chinese cryptocurrency to make inroads into Africa?
Yes, definitely. At CAMES, which was the China-Africa Mobile Economy Summit in Nairobi last year, it really was a showcase for all the Transsion and NetEase companies, and I was blown away by how massive their ecosystem is. Right? It's not just Boomplay and Boomplay. It's publishing. It's their iOS. It is their own mobile browser. It is in all their mobile gaming. It's an entire world in and of themselves that is on the techno phones, right? And if considering how high mobile penetration is, and considering how important a phone and everything that happens on the phone is to African consumers, it would completely make sense for some kind of PBOC coin or whatever to actually make a move and penetrate through one of these Chinese companies.
And when you say PBOC coin, just for everybody who's not following, that's the People's Bank of China and their digital cryptocurrency. Also, to point out, purists will tell you that because China's cryptocurrency is not 100% anonymous as non-Chinese cryptocurrencies are, even calling it a cryptocurrency is not technically accurate. I want to acknowledge that. We're using that for shorthand. There is a way for the Chinese to monitor the use of that cryptocurrency. That is not a bug, that is a feature of how the Chinese want to do it. Okay, Stephany, we have taken up too much of your time, so we're going to kind of end our discussion today looking at your crystal ball. You are somebody who sits in all these great presentations. You're seeing what is going on. What should we expect from 2020 in the China-Africa tech space? Is it going to be more hardware, more VC, more apps, or all of the above?
So I can tell you what I would like to see more of. There's some industries that are absolutely, growing and doing such innovative things. And I think Africa has a real competitive edge when it comes to those industries. And for me, at least, I think that is, sustainability within the side of, clean and solar energy. I think those kinds of products and startups traditionally have done very well, but also have taken a lot of development money just because of their focus. I think it would be great considering China's new, not new, but their sustainability focus to come in and bring in a lot of their technologies into these kinds of companies in Africa. I think the other space that's also really exciting is around ag tech. At the very basics in China, you see the way they're using big data to help farmers and even like a seventh tier city, right? And I would love to see Chinese VCs bring in that kind of big data and that kind of technology and work with Chinese startups with African startups in order to scale these kinds of technologies in Africa. I think in 2019, another year, we kind of hit the year where we realized we're not at climate, global warming anymore. We're at global hot. And when it comes to vulnerable populations, Africa is one of the continents that is going to be affected the most. And China in the last 10 years has made a big change when it comes to their stance on green developments. And it would be amazing to start seeing them use and apply a lot of that technology and innovation into the African continent. I think one of the ways that we can do that is having smart green money from Chinese VCs come into Africa.
Great ambition. This is one of the areas that we cover, as much as possible in our daily email newsletter that goes out to. We have quite a few venture capitalists and private equity folks on our distribution list who are trying to keep ahead of the trends. I struggle to find all the information about it. If somebody wants to find out, what's going on in the space, where do you go to read and find out information? Because I know a lot of people ask me, how do I stay on top of everything that's going on?
I think I have conversations with you, Eric.
Well, that's a circle right there. That's what we call a feedback loop.
Yeah. So the China-Africa Tech Initiative does put out reports around specific topics like green and sustainable energy. There's a couple of groups that are like China Africa tech groups that I stay in contact with. I think it's one of the things I definitely said I'm gonna do more of in this coming year, Eric, is write articles around China Africa tech for China Africa Project so people can stay more updated.
There's a big demand for it. I'll tell you, people are really interested in this subject from all sides. From the investment side, from the consumer side, from the security side, geopolitical. I mean, it touches on almost every aspect of life.
But it's tough because the VC world to begin with is one that's very private and very closed. Investments are very sensitive. And so to be honest, a lot of my intel just comes from having conversations and making sure I stay updated with people. But I definitely see the need to kind of spread this information further.
Well, that is a wonderful ambition for 2020 because we hope that you will be contributing to us so people can read what you're saying. We've got a couple articles from other VCs on our website at ChinaAfricaProject.com. Stephany Zoo is the founder of the China Africa Tech Initiative. She's also a veteran of the African Fintech space, also in China as well. Stephany, if people want to follow what you're doing and connect with you to kind of find out more, also just to read what you're reading and writing these days, what's the best way for them to stay in touch with you?
They can either connect with me on LinkedIn. If you just Google Stephany Zoo, you will find me. Otherwise, you can sign up to get our reports and stuff on ChinaAfrica.tech.
Well, thank you so much for taking the time out of your schedule in London. A busy, busy day ahead for you, I know. And so we're just so grateful that we finally got you on the show.
Thank you so much. It was a pleasure to be on.
Cobus will be back with us next week for another edition of the China in Africa podcast. For Cobus Van Staden, I'm Eric Olander. Thank you so much for listening.
The discussion continues online. Head over to facebook.com/China Africa Project to share your thoughts on today's show. The guys are also on Twitter, where you can find Cobus at Stadinsky or Eric at E. Olander. And be sure to sign up for the weekly China in Africa email newsletter by going to www.ChinaAfricaProject.com.